Broadcast. Welcome to the June 13th episode of the Zaner MarketCast, your one and only spot to keep up with all the agricultural market news. I am Joe Nikruto.
And I'm Dan Hussey.
Welcome. This is not the end of the week. Scheduling, logistics, and amount of information. We are visiting with you. Today is Thursday, not Friday. So not the end of the week, but a lot of information to get to here. But before we get to that, Dan, you and I were talking about the Chinese can actually make it rain.
Yeah.
So we are always saying, hey, everybody's got to make it rain. You got to do this, make it rain, do that, make it rain. Turns out maybe the Chinese can actually make it rain.
And we're not talking about some of the ancient versions and beliefs and mysticism, including the ritual sacrifices of animals and humans to try to make it rain that we read about, literally throwing into the river. We're talking about new modern day cloud seeding technologies, much like we saw in those recent rains. I think it was in Dubai, where it was literally a monsoon in the desert. China is opting to try to kill this heat wave that they're having and bring some rain to their crops through artificial rain seeding, right?
And we're going to talk about that a little bit today. But my mind was blown that back in the day, to appease the river dragon, would throw valuable items, young women, food, whatever else, into the river to hopefully get it to rain.
I was just thinking about the river right outside our window. We have a river. Chicago River.
Yeah.
What could we do to try to make it rain? Although we don't need any, more rain in the forecast per se right now.
In this neck of the woods, yeah, for sure.
But sure.
But should we need to, we could throw some stuff in the river.
The Chicago River dragon will need to be appeased.
I understand that in days past, maybe some dry ice had been thrown in the river. Not sure if there was a permit for that, but little dry ice experiment that had taken place.
Shockingly anticlimactic. Is what it was.
Dry ice does not float.
It doesn't. Yeah, we learned a valuable lesson that day. That dry ice into the Chicago River does not float.
I don't know if that made it rain or it did not make it rain, but it certainly increased the boredom factor. No doubt about it.
We had a jam-packed week full of news here.
Absolutely.
WASDE, we had what do you call it? CPI data out for other things. We had export data out this morning too. The recap for this week, there's a lot more to talk about than we've had in weeks past. Right?
Today we're going to talk about some Russian grain. We're going to talk about a little bit of Chinese weather making its way into the agricultural news out of mainstream media, oddly. And we're going to talk about some of the things that we see technically. But let's begin, Dan, if you will. Now, these are not weekly numbers. These are numbers for the week up to this point as it's Thursday. So I'm going to try to remind myself by saying so far. For corn, this week we opened up at 448 3/4. High was 460.5. Low 447 3/4. Last trade I saw on Thursday afternoon, 458.5. That's up 9 3/4 in a market that is estimated. ADM estimates of the commodity trading fund position, short 210,000 contracts.
Wow.
I mentioned that. Absolutely. Wow. So I mentioned that as there may be some fund short covering taking place. And we're going to talk a bit more about that. Let's talk about that now. So we saw WASDE balance sheet in corn yesterday that was largely unchanged. Am I right about that?
Yeah, with the exception of a little reduction. Well, no, it was unchanged because I almost went to the soy numbers for Brazil. We'll get to those in a minute.
Kicking the can out to next month, maybe,
but
right?
Absolutely. Corn on the WASDE was generally just a muted report all around. There was some reductions in the, the world numbers, right? Here I got world ending stocks for corn were reduced by just shy of 1 million metric tons for old crop. And just shy of 1.5 million for new crop. But that at the end of the day are kind of, I don't want to say rounding errors, but that's, just like kind of a little due diligence maybe, on the global stockpiles. And I think if you dug into those, it wasn't necessarily about South American or US production that changed those. So, it's not not even much of a talking point.
Speaking of which, CONAB numbers today, corn production for Brazil, they came out with a 114.14 number versus the 111.64 number for May. So CONAB raising their idea of corn production in Brazil, but still versus the USDA's 122. So
right, still the rather large discrepancy and spread between the USDA and the CONAB numbers. You would imagine them trying to maybe come and meet in the middle at some point. I mean, we're going to find out what the right number is eventually. And one of the main reasons that we've had in discussions amongst our own crew here at Zaner, and that Ted has had with some of the USDA peoples, is that, and the people who are coming up with the USDA numbers, is that, there's a different starting acreage number there for these between CONAB and the USDA. And that sets, a different benchmark that they're all working from. And that benchmark becomes a little arbitrary for those that don't know at home. It becomes kind of, I don't want to say set in stone, but it becomes the number they work off of. So if they do other reductions throughout the crop year, they're going to work with that same acreage number, reducing yield. You're going to see that drop in a production number out of South America that the USDA may have had a larger starting acreage number and are not willing to do those yield reductions. Or if they do, they're not going to come down all the way. So there's that difference since the start of the year, and the difference in the spread there can be statistically explained, but it doesn't give us anyone any credence or any feeling better about the numbers themselves, right?
Still quite a gap.
Yeah, huge gap, right?
Yeah.
And you imagine that's close, but somebody will be right at the end of the year. We'll see.
Now that takes us to a quick look at the technicals daily chart here post WASDE. And I feel as though we have been here before,
yes.
But rather productive, potentially productive looking chart in that we are out over some pretty key levels. Am I right?
Yeah. And that was really July corn proved to us yesterday with a close back above that 18-day moving average, the 55-day and 100-day moving averages, and really back above. And you'll see on your screen now that upward sloping trend line that was against the lows since last February. We broke below that level, and all of those moving averages in both old and new crop corn. The old crop corn here has retaken them, and arguably on the weekly chart with what we're seeing looks pretty good. Now, in juxtaposition to the new crop, charts, and this is true of soybeans too, the new crop charts have just traded up into that congestion zone and back into that trend line as resistance today. So, a close though today above that 18-day and 55-day moving average is still worth note for December corn. But we're right into the congestion zone where you might think to yourself, oh, is this all broken support now resistance? But that isn't true on the new crop chart. So a tale of two crops here and two different price charts as these technicals are painting a slightly different picture, but they leave us with something to pay attention to for sure.
And so you and I have been here before where we have sat here on maybe a Friday instead of a Thursday and said, man, this chart looks great.
Yeah.
We show back up on Monday and Tuesday. It gets destroyed. And, we're back down below the moving averages. Let me ask you, and just an opinion, and nobody's going to hold you to this, but what about this technical action? And maybe if you want to comment down below, or you guys have an opinion, what about this technical action is going to get you to a place where you're comfortable? So we are outside of the moving averages. We're outside of the highs from the previous couple of days. This chart looks great, but I still am slightly nervous, right? I'm concerned. So you rally up a little bit tomorrow, Sunday night, Monday, you retreat a little bit, come down, find support. Where would it need to go for you to say, okay, we could rally this thing?
I think holding above the levels that we finally gotten back above is going to be key now in the short term to confirming potentially more upside. But otherwise, so far the closes today are signals to, for the bullish, trader to maybe start to take some action. I'm going to want to see the market continue to hold, today's low and these levels and stay above them. I want to see December corn get back above that old trend line and make it look really like a fake out to the downside. But, that only brings into question, right, the levels that might be a little bit higher on the chart. That 200-day up at 490 right now, that's been rejected multiple times now on December corn. Reestablishing and getting above there is going to make you feel better. But I'm not super optimistic on the longer time frame that we aren't going to go up and find, another top if this is a rally. This isn't the type of chart that I'm looking at thinking, oh, we're going to $6 corn. There's a lot to chew through. $5 December corn is going to be interesting if it ever gets there. But in the meantime, I think we've got that higher highs and higher lows. And today was a day that kind of proved, that by all means, the last week, it had every opportunity to fall apart and sell off. And we just didn't see that happen yet. Right. So
there is some talk. There is some talk that you've got speculators, you've got managed money on the bid, right? So your commodity trading fund, who is short over 200, estimated to be short over 200,000 contracts. If they're on the bid, Now, if that has been your featured seller, and all of a sudden, for whatever reason, we're going to talk about maybe a reason here in a minute why your seller, your primary market mover, has shifted and turned 180 degrees and is now covering these positions.
Mm-hmm.
There's a lot of contracts there that could be covered. So I certainly have to wait and see, but we'll get.
And I got one last piece
Go
to
ahead.
play devil's advocate here on the December and the July corn chart. Using December corn just as a good example, that because I've been paying more attention to it, but the 440 level in July corn and the 460 level now in December corn seem to be a neckline for a new head and shoulders pattern as well. And the right shoulder is just forming into this 475 to 480 area. The left shoulder was back in the highs of March for both of these contracts, and both of them have now traded into that right shoulder. So there's going to be a round of sellers and people that are looking at that pattern saying, hey, we roll over here, we take out that neckline. From a producer standpoint, it makes a lot of sense to look at 460 as an active level, maybe for put protection at this point in the event that we do roll over. And in hopes that we go back up to the $5, $5.10 mark. Just to give you a quick idea of what I would be looking at is buying 460 puts and potentially selling a 5 or 5.10 call. Not a strategy to sell options if you're just speculating, but from a producing hedge standpoint, that ends up becoming a potential upside target for or potential future sale up above 5 if it gets there.
What month are we talking about?
We're talking December corn here. New crop, December corn.
And purely for just instructional purposes or
Absolutely.
These are areas, you're highlighting areas that maybe if you're a producer and you have corn in the bin, maybe you want
it's covering it, right? You're covering
absolutely.
it. It's a means of right projecting a potential future sale. And remember, trading futures involves risk and is not suitable for all investors. And anything we talk about here today is just our own opinions and not a direct trade recommendation.
Let's jump into wheat. For the week, we opened at 626. High was 633 in July wheat. Low trade I saw was 605.5. Last trade today on Thursday, so far this week, 620. That's down 7.5 so far this week in a market where we estimate that the funds are short 52,000 contracts.
Yeah. And right into major technical levels too in this big sell-off as well.
On the heels of the USDA recognizing the Russian wheat challenge, reducing their production in Russia by about 5 million metric tons.
That's right.
I believe. And so certainly, and here again, a tale of two cities, U.S. crop, depending on who you check in with, looks pretty okay, right? But Russia having some trouble this week. Head of a growers union came out and said he thought maybe that 30% of that wheat could be impacted by the frost that they're having there. And so, I'm not I've only been doing this since 1992, and I don't have a tremendous amount of experience following Russian wheat grower union representatives. But there's always something new for us.
Somewhere wants to talk about
information's
wheat.
Coming from somewhere. My question is if the Russians have a chance to. My question is, I wonder what the path of least resistance is here for Chicago wheat or Kansas City wheat or your Minneapolis wheat, right? So there are some implications here for these U.S. wheat prices based on what is happening in Russia.
Absolutely, and some WASDE didn't change much in the way of wheat. We had U.S. ending stocks virtually unchanged in old and new crop. I mean, 8 million bushel reduction? Yeah, in new crop wheat. Okay, that's a rounding error, on the charts. A minor increase there, to 259.56 on the new crop or old crop number, up from 257 in last week's report for the world ending stocks, and a slight reduction by 1.4 million metric tons in new crop production for U.S. wheat. All wheat production for the USDA was virtually, unchanged. There was, basically within 10 million bushel, change there. It's not even worth, in my opinion, even really spending any more time than that on. And the wheat chart itself, though, has been quite the reversal. I know there's a bit of a trend line resistance or a channel resistance there on July contract. KC contract just seems to have turned over at somewhere above the $7 figure, rolled below your big 18-day moving averages on both, and we've had 1, 2, 3, 4, 5, 6, 7, 8, 9 red days in a row there for Chicago wheat.
You would not believe that unless you saw it with your own eyes,
and
right?
taking a dollar off the charts in 9 days, wow. And, the market struggled for a bit there to break back above that 200-day. Boy, haven't we come back to test that cluster of moving averages now as support. We proverbially from April through May ripped through 55-day, 100-day, 200-day moving averages, and now have pulled back to test all three of those here in the last week, and arguably are holding above them. I'm not advocating for saying that, hey, this might be a chance to buy wheat on the dip if it's going higher, but certainly there's a technical reason why, this last week of price action, well, for Chicago wheat, last 3-4 days, I should say, in the last maybe 2 days of price action for KC July wheat have at least found some short-term support. Does that support hold is the $1 million question.
For sure. At least we're checking up, and we're going to get a chance to come back and see what this thing does. Maybe we get a better close tomorrow, or folks should be aware that maybe they're only short 52,000 contracts, and if they got to buy them back, maybe we've got some place to go to the upside.
52,000, is that an estimate directly from the CFTC, or that's the daily estimate?
That's the daily count. So as we came into the day, maybe we're short, and right. Certainly estimates, and we have seen the astute among us of the three listeners will recognize that we have had trouble. The trade has had trouble tracking the commodity trading fund participant in recent weeks, where a lot of business has gotten done without making it to that daily count. So we're going to be looking at the commitment of traders tomorrow with an interested eye. We're going to be looking at what's happening with wheat, what's happening with corn, certainly what's happening with beans. But that definitely, you're right. That is definitely an estimate.
I mean, we talked about the volume today on the open in corn and beans, right? Significant 15,000 contracts, let's call it, somewhere in that range, right? And it wasn't enough to move the markets and move that needle, which, okay, you could talk about the fair value of supply and demand and buyers and sellers meeting there. We don't know who the aggressor was on that 15,000, but clearly, if that was 15,000 contracts of funds trying to cover out of the market, right? There's definitely some exit liquidity. Sellers in this event that capped it from going any further.
Willing to let them.
Absolutely. Somebody's willing to sell into that volume buying if that's what we saw today on today's open.
How about beans? We opened the week at 11.79 and a quarter. High was 11.93. Low trade I saw today was 11.71. Last trade, or rather low trade so far this week, 11.71. Last trade here on Thursday, 11.89 and a half. And for beans,
which today was a double bottom there for July beans, I think.
It
was very close if it wasn't.
Up 10 and a quarter for the week so far, right?
Right. And a higher high, in corn, wheat, and beans today. Well, not wheat, but corn and beans in both old and new crop. The higher high and a higher low for the others. Seems to be, the first day of maybe a little bit of a rosy close to the day that we've seen.
And so just to revisit CONAB, 147.35, right? Down slightly from their 147.68 in May versus, and here we go again, versus the USDA's 153 yesterday, which was down from 154. So trying to find a meeting of the minds there. The 153 at 147.35. Is that a big difference, or is it getting smaller?
You'd think it's getting smaller just because the USDA tightened up their, the Brazilian number?
They brought that by about
153 from 154. Yep. The only change
million metric tons, right?
Million metric tons. The only change on the South American balance sheet that we saw out of the USDA. So, okay, their USDA's coming down a little bit there. It's, whatever. I'd love to hear a little bit more rationale as to why they just didn't leave it unchanged versus everything else. Like, why do you change the beans number and not the corn?
Sure.
But okay, they do their things and they have their purposes and reasons behind everything. But nevertheless,
these bean charts that we're looking at here, it looks like almost two different markets. If you look at the November versus the July trying to hold up a little bit, but that November has come a little bit further. Then
you could say the same thing about December and new crop and old crop corn there as well.
Widening out a bit.
Absolutely, right? Like your new crop contracts got beaten up a little bit more, definitely led to the downside. Will have to do a little bit more to recover now if they want to recover to the same effect or more. But you had July effectively holding that channel support. That's the big technical level that I see here outside of the April lows. there's a channel support on that July bean chart that is holding today with a bit of a double bottom for the week so far, and a higher high close today, leads me to believe that there could be a little bit more short covering or push up to that 55 and 100-day moving average, which come in right at 1198, and maybe a test of that 18-day up at 1207. That seems to be the next technical area, as well as, old highs there from earlier this month. I think the highs of the month, in fact, up there, that we could go back and test. It would also make sense if the, November beans wanted to squeeze up and test a similar level. Its 18-day, 100-day, and 55-day are all coming in clustered between 1177 and 1182 there. That's also where that upward sloping trend line that is old support now being tested resistance. And mind you, held as resistance once a week ago already. So, it's hard to look at that Novi bean chart and not see that potential technical resistance above us, just like you look at the December corn chart. And then you look at old crop and you're like, well, old crop's kind of getting it done in terms of proving it wants to be above or rallying back to those levels.
And Dan, I'll tell you, the thing that catches my eye on these charts, and it so far it's a minor thing, but you had the opportunity yesterday for range expansion to the downside.
Sure.
Right? Off that WASDE, and traded a little bit lower post report and maybe even a little bit before the report. But then as you went into the end of the day, prices got firmer. You came down in both July and November. Came down in the overnight.
And November even proved it could go lower and then has come right back up, right?
In the overnight, attempted to go back and take out those lows, and you didn't get it.
Yeah.
And now you're closing the day in rather productive price action.
And I know we're into some rolls here, and there's certainly something to be said about what spread markets have done. Too much there to cover in our short time frame here, but I think Joe's right. Like, there is some proof in here that the markets have had every opportunity to go down, and they haven't yet. Not saying they can't, but exhaustion perhaps to the downside could be the name of the game.
Could very well be. How about meal? We opened the week at 360.50. High was 371.40. Low this week 358. So far, last 368.30. That's a change of 760 to the good side, up 760. Funds, interestingly, folks still watching this number. Funds are long 112,000 contracts in meal at the Chicago Board of Trade. 112,000 contracts. So now you look at the rest of the complex: short 210 corn, short 52 wheat, short 38 beans. In a minute, we're going to talk about oil, short 50,000 oil, but meal, long 112,000
That meal,
contracts.
man, that is like the one weird spot in all of our commitment to traders, because you need the funds and you need meal to get longer for the market to go up. And I will say, though, boy, did we see a move today in meal that made things look a little bit more impressive to the rally we saw in soybeans. We're always on this team concerned when we don't see meal rally alongside soybeans because, there happens to be true demand there. That can, if when both are going at once, there's something more to that rally, in my opinion. And I'm sure I speak for Joe and Ted, and especially Ted, who coined the phrase "a meal deal." When the two are moving together.
How about oil? We opened the week 43.60, high 44.17. Low trade so far this week 43.07. Last trade 43.86. That's up just a fractional 0.23. And then your funds again short the 50,000 contracts there. Not Conab, but NOPA crush numbers coming.
Nope, I didn't catch him today.
No, not today. But there's estimates for when they do come out, right?
I believe so, and I don't.
And they were not. They were
in front of me. Right
that's
now.
okay, but they were a bit higher than the last week numbers. Sure. Those last week numbers caught everybody. They were revised up, but not really up a whole lot. This week's numbers seem to speak to a more normal situation post maintenance, and things are moving along.
Right. And that happens to be one of the places that, right, if you want to play devil's advocate against the domestic demand for soybeans, right, those NOPA crush numbers coming in less than expected, never a good look, considering they're usually thought by many analysts to be a sure thing. For sure. Dan, should we jump to some news? I do. And real quick, just to highlight some the net export sales from this morning, just a quick glassing over the numbers. All I really want to say on it is that, okay, uptick in those soybean sales. We've seen flash sales for the last few days, 377 million tons sold in soybean for old crop. You know what I mean? It came in line with expectations.
Some of that to China, though.
Barely, right, but barely anything in new crop, which really just
New crop still a
killing us.
thorn. Still a thorn in the side. We're gonna have to find some demand.
Right, almost nothing there. Like inconsequential, the amount that we've had. Corn, though, with over 1 million metric tons every week, just keeps going. 1 million to 1.5 million every week. I'll never figure out how they get those sales without a flash sale. You know, like how do you hit 1 million metric tons a week and not go over 100,000 a day and have to report
Same
it?
way they make it rain.
Yeah, you know, mind blown. The way the games that are played, right? But corn exports continue to be strong, and I guess you could always chalk it up to a good reason why corn has been relatively better bid than beans over the last several weeks. I think some of that export demand is certainly holding the market
more
up.
competitive out into the summer months, from what I understand. I don't have that in front of me, but price wise and lower prices. Oftentimes, what do we say? Lower prices, the cure for lower prices. Folks looking and
the opposite of price rationing demand, right?
Spain was there. Mexico's been there. I think Japan was there. I can't remember the rest of the big names in the exports. Some South Americans, which kind of blew my mind.
Yeah, right. When you think that corn is so much easier and cheaper to come by in some of their neighboring countries, I wonder why they're looking to our markets right now. Right? It has to be an interesting thing to look into. Well, we've got some news out of Russia, India, and China here. Russian grain exporters see growth potential in India and China. We talked about this last time, and it seems to finally be hitting the news that, hey, some of this hand-holding between those countries, and if Russia can't sell their grain and the EU is saying, hey, we don't want any, the markets are going to turn to. Russia grain exporters see potential to increase supplies of cereals to India and China, while continuing to focus on their traditional markets in the Middle East and North Africa. Notice how they left Europe out of that equation here. Said on Tuesday, a little bit of jibber jabber there. Turkey's decision to halt wheat imports will not affect the level of Russian exports, it said in a statement following talks between the agricultural minister and grain exporters. The ministry said that in current environment, domestic exports will focus on key markets of the Middle East and North Africa, as well as on developing relationships with India and China, where there is progress in the supply of broad prospects of grain and crops. Turkey and Egypt have traditionally been key importers of Russian wheat, and spring frost followed by drought have caused significant damage in the 2024 crop in Russia to the tune of 5 million metric tons, I think?
5 million.
Yeah,
according to the USDA, some numbers are even bigger.
Right, yeah. The agricultural ministry is still maintaining its harvest forecast at 132 million metric tons. So I don't believe we've seen them reduce that number just yet. Interesting to say, but says it may adjust it in the drought and may adjust it due to the drought and if severity in if it persists in certain regions. Against the backdrop of high harvests in recent years, Russia has been actively increasing exports in an effort to find new markets and possibly fund a war with the Ukraine. In the 2023-2024 season ending on June 30th, grain exports are estimated up to 70 million tons, a record including 53 million tons of wheat. Russia may narrow that spread of its grain exports in the new season due to crop problems, but keeping supplies in its traditional markets, as we noted before, and expanding to China and India.
Speaking of China, so yesterday afternoon, post WASDE, take a look at Karen Braun's X or Twitter. If you don't follow Karen Braun, you probably should. She does a
Thank you, Karen.
Yeah, she does a great job. But she posts a Reuters story that was about 15 hours old, speaking of the heat in China. And I had not seen any mention of this yet in the agricultural stuff that we follow, but a quick look out on the internet said that mainstream traditional news outlets have been covering it for about 3 days. Today, that story is making its way through. China hit by searing temperatures as Asia braces for extreme summer, says Reuters. Temperatures are hitting record highs in parts of North and Central China this week, while a severe drought in the East is also threatening crops as countries across Asia brace themselves for another summer of extreme weather. The National Meteorological Center, say that 3 times fast, NMC, also warned late on Tuesday of the impact of soaring temperatures on energy supplies, crop production, and people's health. More than 20 weather stations in northern Hebei and eastern Shandong provinces logged record high seasonal temperatures during the first 10 days of June. I don't think they listed here, but the temperatures I saw yesterday,
well above 100,
108.
pushing 110,
108.
42
now,
degrees
what's
Celsius.
the record? 126. But so 108, not quite to the record. NMC said earlier this week, record-breaking heat scorched large parts of Asia in April, killing hundreds of people, damaging crops, and forcing schools to shut down. Soaring temperatures will continue to envelop northern China until June 20th, where the mercury could reach or exceed historical highs in Hebei, Shaanxi, as well as central Henan province, NMC said. In Mengin County in Shandong, local authorities have had to resort to measures like creating artificial rain to combat an unusually severe drought this year, local media reported.
And as we saw from a video earlier today, it's not only combating with rain, it's also the anti-hail rockets that they're sending.
Anti-hail rockets.
But a lot of measures, kind of a cool Google search if you want to look into what some of the cloud seeding and technologies are doing there to create rain. But just to add to that story, Joe, if you're focusing on a weather market, you're looking at the wrong weather market right now, I think. The story isn't in the U.S. The story is in Asia, if it's, in my humble opinion,
could very well
as
be
to
the case.
Where you might need to be paying attention to those temperatures and weather markets over the next couple of weeks.
And the reason this has caught our eye, right, is because during the last time we were here, the last time we visited, funds were aggressively selling. And it looked like, okay, they've got some ammunition here. They could really be leaning into these markets. Now, all of a sudden, you see open interest, especially in corn, starting to go down, starting to see some volume. And so commitment of traders is tomorrow. We're going to want to look at that. But as Dan is mentioning, if you've not been paying attention, this is probably a story that we want to, and we're going to do our level best to try and keep everybody up to date on this from week to week and day to day. So something we want to pay attention to. Dan, do we have any other, what other news? What news?
Yeah,
I think we got it, right?
I think we got it all. I think, again, pay attention to some of those weather stories out of China. It's been interesting to see them be a little bit of a seller on some of those markets, like in meal over the last few weeks, knowing that they internally should see some headwinds to domestic production. Sure. But I think also China rests on its laurels, knowing that they have the South American and U.S. production to go, come shopping at when they need it. There's the rest of this week here is going to be interesting. And hey, next week, everybody, there's a shortened schedule. Wednesday. A federal holiday. So I think we close on Tuesday and don't reopen until Thursday morning, perhaps. Don't quote me on that.
We got to double check that, but we certainly closed Tuesday.
We're not trading Wednesday.
No trade.
For agricultural futures.
No ag products traded.
I would not be surprised to see some volume and some interesting trade tomorrow as people try to square up ahead of a shortened week next week, a holiday week. That really is a weird having a federal holiday in the middle of the week.
Dan, you're really going to squeeze 3 weekends into the next 7 calendar days, right? So you're going to have tomorrow, you're going to have Tuesday, and then you're going to come back and have another weekend. And so, if folks are starting to make decisions about what they're nervous about or positions that may be too big or too small,
in a weather
we could see some crazy price action. Dan, producer Carter offers this week's wacky question. If you could have dinner with any historical figure, who would it be?
Oh.
That's a tough one.
I have answered this question a few different ways.
Chicken wings with Abe Lincoln.
Like, I'd love to have
that's not my. That's not mine. Yeah.
I've been asked this question before, and I've had a few different answers. I've gone a few ways, and depending on the company I'm with, I've gone for the shockers of people, Charlie Manson, Adolf Hitler, the weirdos of the world, the most insane, corrupt, terrible individuals, just because I'm interested to hear what they like, to learn how psychopaths operate, right? Because, hey, we all love those Netflix documentaries, right? But the reality is I've thought more and more about it. I would much rather sit down with any one of our founding fathers, because I think it is just incredibly badass to thumb your nose at the man, start a war over not wanting to pay taxes. And I just want to get into their mindset of okay, at what point did you say enough is enough? There's something that needs to be done, right? Sure. Because I don't know how we went from paying no personal income tax in this country to paying upwards of 40% in some situations. We started a war over a 2% tax on tea, people.
Some tea.
2% tax on tea. So I want to know what the founding fathers are thinking.
We'd have to have George bring his bring his wooden teeth if we were going to eat chicken wings with those guys. And so that's great. And so that was a really great answer. Thank goodness, because I don't have a good one yet again. Producer Carter catches me on my heels with these wacky questions every time. But the first thing that popped into my mind was, and I don't know if this qualifies. Carter, you'll have to give us an answer from the judges if this qualifies. But
is it a real person?
Yeah. What about so I would like to eat dinner or maybe have a cocktail or 10 with Anthony Bourdain.
Okay.
And maybe just give him a good shake,
what were you thinking? You had it all.
Come on,
right?
you got everything.
You had,
but that's what comes to my mind. Anthony Bourdain, or maybe
he did. I mean, he had the coolest show ever.
Yeah.
Traveling around the world,
terrific.
eating some awesome rub. I mean,
just terrific. Yep.
I mean,
so that's what I'm going to go with.
Him and Robin Williams too, right? Like what,
exactly.
But okay. Anyway.
And what would you eat?
Oh, that's really good. That's a really good question. I think I would have to take them out for like some modern, like Italian beef or deep dish pizza. And you're like, hold on, bro.
Sure.
You ain't seen nothing yet, Yep. What would you eat?
I think I'd probably eat about 36 raw oysters. And
I was going to say, if it's with Anthony Bourdain,
it better be good. Yeah. And then probably about 72 ounces of Chicago's or Des Moines or Kansas City or Dallas, Texas's finest bone-in ribeye. 72 ounces probably do the trick, at least depending on what I have for lunch.
I would hope so.
Thank you so much for visiting with us. Dan, take us home.
Yeah, thank you for listening to the Zaner MarketCast today. If you need more, just because you can't get enough of us, you can follow us on Facebook at Zaner Ag Hedge or Twitter and LinkedIn at Zaner Group. If you have not already, check out the Daily Ag Hedge hotline.
It's free.
Yeah, it is, where you can get call in every day to get the daily agricultural updates from our one and only Ted Seifried. And like Joe said, it's free. You may have seen him on RFD TV and Market to Market. The best part is, it's free.
It's free.
I don't know if you
may have mentioned that.
Free.
We may have mentioned that.
You can find.
If you don't like it, we'll give you your money back.
You can find the sign up for this in the links provided. Thank you again, and be sure to drop a like or a comment and follow us in this podcast to not miss a beat. And we will be back with you as price action evolves.
Thank you. Have a great week.